Somewhere in your DMs right now there's a pitch. A market-neutral trade, free money while you sleep, just plug in the bot. We tore that pitch apart 2 briefings back, and here's the twist the teardown earned. The trade those bots pretend to do is real. It has a name, funding rate arbitrage, and the numbers behind it aren't hidden in anyone's blueprint. They're sitting on an open board, updating around the clock, readable by anyone with the nerve to look. That's the board on screen now, real product, real public data, captured as is and dated in the corner, because rates move and this desk doesn't pretend otherwise. By the end of this briefing, you'll read it yourself, the pressure, the trade, and every toll the pitch leaves out. Education, never advice. Let's read. 60 seconds of foundation, because the board only speaks if you know the language. A perpetual future has no expiry date, so nothing forces its price back to the real spot price. Funding is the leash. At set intervals, one side of every perp market pays the other and the direction follows the gap. When the perp trades above spot, crowd leaning long, longs pay shorts. When it trades below, crowd leaning short, shorts pay longs. The payment doesn't come from the venue. It flows trader to trader, a pressure valve made of money. We spent a whole briefing on what that pressure means, the pressure gauge, linked below. Today is the practical sequel, not what funding says about the crowd, but how to read the board it's printed on, and what the patient side of that payment stream actually looks like. Here's the board, and here's how a scout reads it. First, the rate itself, a small percentage per interval. It looks like nothing. It is not nothing because it repeats, interval after interval, all year. Small numbers on a fast clock compound into serious annual figures in either direction. Second, the sign. Positive, longs are paying shorts. The crowd is leaning long and paying for the privilege. Negative, the payments flow the other way. Third, the clock. Intervals differ by market and venue, so a rate means nothing until you know how often it fires. Now widen out. The table view puts every symbol side by side, and the spread between them is the story. Majors calm here, some meme pair screaming double digits there. Why the difference? Crowding. Extreme rates mean an extremely lopsided crowd. That's pressure gauge territory. Drill into one symbol and you get the history, because today's rate is a mood and the history is a climate. And the heat map gives you the whole battlefield in one glance, where the pressure lives right now. That's the reading. No account, no bot, no pitch, a public board, and 2 minutes of your attention. So what is the real trade the pitch imitates? In its cleanest form, hold the asset itself and short the same asset's perp in equal size. Price goes up, the spot gains, the short loses, roughly a wash. Price goes down, mirror image, still a wash. You've gone flat on direction. What's left is the funding stream. When the rate is positive, the crowd of longs is paying the shorts, and you're standing on the receiving side, collecting the pressure payments while price risk mostly cancels. That's funding rate arbitrage. It's real, it's old, and on days when the board runs hot, it's why the patient money smiles. And on this desk it stays exactly what I just called it. A machine described. Not a suggestion, not a starter kit, not a nudge. The Forge ships a calculator for this arithmetic. It's on screen, it's a tool, and what it outputs is arithmetic, not advice. Because here's what the DM pitch will never tell you, and the next 2 beats will. The wash isn't perfectly a wash. The stream doesn't always flow your way, and the tolls on this road eat the careless alive. Now the turn. Every word of that machine was true, and the pitch built on it is still a lie, because free dies the moment you read the meter. Entry costs, exit costs, fees on both legs, spreads on both legs, and the drift between your 2 positions that makes the wash a leaky one. The Forge's costs page exists because this desk believes the meter should be public, what the road charges in the open. And run the stream from the other chair. The funding cost calculator shows what a leveraged position bleeds in funding while it waits. Same river, other bank. Every collector needs a payer, and the payer is usually someone who never checked the board. Then remember the teardown. When a DM promises you this trade done for you, guaranteed, hands off, you already know the ladder it has to climb, and you already know rung 5. The real version needs capital on both legs, execution, and attention. The fake version needs only your deposit. If the board's starting to speak to you, hit subscribe. Literacy is the whole weapon here. Every toll booth at full volume. 1. The rate flips. Positive funding is weather, not law. The stream you were collecting can reverse, and the trade that paid you starts charging you. The history chart exists precisely so you can see how often the weather turns. 2. The short leg is a real leverage position. A violent spike can liquidate it before you react, and then you're not neutral anymore, you're just long in a storm. The sizing bench and the liquidation line, the tools are linked below, exist because this arithmetic kills the casual. 3. Venue risk. Your legs live on platforms, and platforms can fail, freeze, or get hacked. The ledger file read those receipts. 4. What backs each leg matters. Pegs and custody are risks, not footnotes. 5. Capital. Both legs need funding, so the return is measured against everything you parked, not the headline rate. Added up honestly, and funding arbitrage is a real trade with real work, real risk, and no guarantees anywhere. Data and education, never advice. Anyone selling it as a money printer skipped this beat on purpose. And now the doctrine this whole campaign is built on. Check it yourself. The board you learned to read today is public, and it's not the only one. The big open venues publish their funding too. Same game, different tables, and the spreads between venues are their own education. The forge's job is to put the whole battlefield in one window, the intel, the telemetry, the wire that pings you when pressure crosses the lines you set. We don't trade for you, we can't touch your funds, and nothing on the board is a promise. It's the game readable. The pitch wants you dependent. The board wants you literate. You know which side this desk arms. Data, never advice, and the reading is free forever. So the next time the pitch lands market neutral, free money, the bot does everything. You won't need anyone to tell you it's wrong. You'll open the board. You'll read the rate, the sign, the clock, the history. You'll count the tolls the pitch forgot. And you'll know the difference between a machine that exists and a promise that doesn't. The trade is real. The pitch is not. The board decides, and now you can read it. Move out.